Thanks, Aaron. So my name is Eric. Just a little background on myself. I've been with Noble Credit Union just over 2 years. If you ever went into the airport branch, I used to work at a desk there doing loans and opening new memberships, retirement accounts. Last November, Noble opened a new department called Centralized Lending, where if you're doing like a Visa, personal loan, purchasing a vehicle where basically you don't need to sign DMV forms, which have to be wet signed, we can do your loan basically remote. So I'm now back office doing everything via email, phone. So I'm not part of the marketing department. I'm a consumer loan originator, just helping out while Erica's out. And so this is what I do every day. Monday through Friday, I take online applications, I take phone applications, and I look at credit reports all day, go over the credit report. If a member gets declined on a loan, my job is to let them know how they can improve their credit so they can get approved for a future application. So this is what I do every day. Any questions to start out with before I start going through the slides? No? Okay. And just a little, for the process, I'm just going to read the slide, talk a little bit about it. I encourage questions. If you have a question, something that is important to you, please don't hesitate. You can shout it out, raise your hand, whatever you want to do, okay? Cool. All right, so credit reports, understanding and rebuilding. What is a credit report? Well, a credit report is a record of financial accounts, financial obligations, and identification information, creditor and public record history. Well, history lesson, what is FICO? Fair, Isaac and Company. It was founded in 1956 by Bill Fair and Earl Isaac. I learned this when I read the slides for the first time, by the way, didn't know that. They sold the system 2 years later, probably made a bunch of money for 1956. The score is also known as your credit score, and this is basically a number, okay, that quantifies, that measures your risk as far as us giving you a loan. So very important. The good, bad, and the average. So credit scores range from 300 to 850. The US average is 692. Now the ranges, I'll go into a little bit more information. There's 3 different credit bureaus. So you have Experian, which is what Noble uses. We use solely Experian credit reports. And then you have TransUnion and Equifax. Now, the scoring ranges are different depending on which credit report you're looking at. So I have a lot of members that call and they're telling me, well, your Experian score is 610. And they're telling me, no, I have a 650. Credit Karma tells me that, right? Well, Credit Karma, keep in mind, gives you Equifax and TransUnion. And I always like to tell members this, you get what you pay for. It's a free service. Okay, it's not always accurate. Just realize that, okay? The best way to do it is your actual credit report, which you'll see how you get that later on in this presentation. Why is your credit report important? Will you pay the money back? So again, that number. Used by lenders to determine your credit worthiness. Non-lending situations, so very important. So employment checks, apartment rentals, applications, etc. So apartment rental, maybe, shoot, when I was 21, I, had apartments with roommates, had a little too much fun, put some damages, and then can't pay it back, get sent to collections, and that can really hurt you from renting future apartments. Personal experience on my end in my early 20s, young and dumb. What can you do? All right. What is in a credit report? So identifying information that such as your date of birth, your social security, your address, your name, stuff like that. Account information, and so that is your credit account information, not bank accounts. It doesn't know your bank account information, just credit accounts. Public record information, inquiries, and dispute instructions. So public information would be just stuff about yourself, and then the reports that the creditors have sent to the credit bureau. And then inquiries is when you apply for credit. Dispute instructions is if you see something on your credit report that you think you didn't do or you know you didn't do, it's going to provide you dispute instructions. So very important. That's another good reason to check your credit. So this is actually what your credit report will look like through annualcreditreport.com. okay, and that's the website that the credit bureaus will actually refer you to. You probably see a lot of times, well, you don't see them as much now, but you probably remember creditreport.com, they have the little jingle and everything, and you had to like give them a credit card number, and then you're signing up for a monthly subscription. Just know that annual credit report is not that. It's completely free. You can get a free copy of your report once a year from each of the credit bureaus. What I tell my members, just a way you can check your credit continuously throughout the year, is you can actually request Experian, right? Say you requested Experian in January, and then go ahead and do your TransUnion 4 months later, and then do your Equifax report 4 months later after that, and then when it rolls back around, hey, it's been a year, you can check your Experian report again. So that's kind of a way you can actually check your credit throughout the year. Or you can just get them all at once a year, and review it that way. So things on the credit report, so your report number, that's important in case you need to dispute something. Representatives or the online thing will ask you, what's your report number. The index, it just gives you a little link thing, so there's tabs, you click on them, it takes you to the various sections of the credit report. Potentially negative items, so these are going to be your public records, those are your collections. When you're over 30 days late, over 60 days late, 90 days, that's all going to show on potentially negative items or the public reports. So status indicates the current status of the account. So you can see on this one, status was paid past due 60 days. So keep in mind, just because, let's say you were 30 days late and then, hey, you paid it on the 31st day. Well, if it goes past 30 days, it's been reported to the credit bureau. And I hate to say this, it's on there for 7 years for anyone to see whether you close this account in the future or not. It's on there as a closed account, but it still shows March of 2015, you were 30 days late. It has a severe impact on your credit score. Now, I like to tell my members, hey, time heals all wounds, so it gets better, but you just got to do things the right way to get past that. Let's see. So if you believe information in your report is inaccurate, you can dispute that item quickly, effectively, and cost-free by using Experian's online dispute service located at, it gives you the website right there, and then you have all this information in front of you on the paperwork. Disputing online is the fastest way to address any concern you may have about the information in your credit report. Just a little shaky there. All right. So accounts in good standing. So these are all your accounts that you pay on time. Okay. If you have been late one time, it's always going to show in that. Unfortunately, it's going to show in that potentially negative item. It just takes one derogatory, one late to be in that section. These are all the ones that you paid satisfactory. So the account type indicates whether your account is a revolving or an installment account. So quick definition of revolving and installment. Revolving is a credit card, something you can use, pay back, and reuse again. That's open-ended credit, revolving. Installment is like your mortgage loan, like your car loan, like a personal loan. You're given the money all up front, fixed interest rate, typically, hopefully, and then you have a set payment each month, and then the account closes. So, revolving installment. Any questions so far? I know I'm talking quick, but please raise your hand, interrupt me, please, okay? Request for your credit history. So these are inquiries, okay? They count against your credit for a year, they're on your credit report for 2 years. Inquiries are very important to know about. So, request for your credit history, also called inquiries. Requests for your credit history are logged on your report whenever anyone reviews your credit information. There are 2 types of inquiries. Inquiries resulting from a transaction initiated by you. These include inquiries from your applications for credit, insurance, housing, and other loans. They also include transfer of an account to a collection agency. Creditors may view these items when evaluating your credit worthiness. Okay, so that'd be like a hard inquiry. Inquiries resulting from transactions you may not have initiated but are allowed under the FCRA. These include pre-approved offers as well as for employment, investment review, account monitoring for existing creditors, and requests by you for your own report. These items are shown only to you and have no impact on your credit worthiness or risk scores. So pre-approved offers, the credit card offers you get in the mail. They've done it's called a soft hit. They've done a soft hit on your credit to kind of see where you're at. Just know those pre-approved offers, you fill them out, you send them off, they're doing that hard inquiry when they get that application. So just be aware of that, okay? They're gonna run your credit. Unless it's strictly a pre-approval and you just want to ask questions to make sure, is this gonna be a hard inquiry on my credit report? It's a good question to ask. Let's see. And then when you go to like annualcreditreport.com to get your free copy, that does not impact your credit. Okay, so personal information, just all your stuff, right? All your information, addresses, dates of birth, stuff like that. Not only are the accounts a good spot to spot fraud, but your personal information, it's going to show previous addresses and things like that. So if you see an address, that you've never been at or something like that, you might want to dispute that, get a little bit more involved and make sure there aren't inquiries that aren't yours and stuff like that. So it's very important to look at that kind of stuff. Personal statement. So let's say there was a extreme circumstance that caused you to be late or caused an account to be charged off or something. You can put a consumer statement on your credit report for creditors to see when they're evaluating you to approve a loan. So you could explain like there was a medical emergency, yada, 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 and put that on your credit report. So it's at least considered. So it's a personal statement. Any personal statement you added that you added to your credit report appears here. Note statements remain as part of the report for 2 years and displayed to anyone who has permission to review your report. Not on your credit report. So criminal record, medical information, buying habits, transaction records. So the credit report's not going to show where you swiped your credit card at, stuff like that. Bank account information, so we already discussed that. What doesn't affect your score? So debt ratios, income, length of residence, or employment. Now I will say, length of residence or employment doesn't affect your credit score, but it does affect the loan decision. And there's a slide that further discusses that a little bit. Debt ratio, we'll get in more into that. Very important slide right here. These are the factors that make up your credit score. 2 biggest factors. 35% is payment history. So this is just, it is what it is. It's paying on time. Paying within that 30-day period. Now, you could pay late, get late fees. You don't want to do that because there's called default interest rates where, certain credit cards will jack your interest rate up if you're late. So you got to watch out for that. But if it goes past 30 days, that's when it gets reported to the bureau. So that's where you got to watch out for that 35%. 30% is amounts owed, and that has to do with credit cards. So it has to do with your credit utilization percentage. So it's basically your credit limits. So you add up all your credit limits on your credit cards, and then what you owe, and then whatever the percentage of what you owe. That's what makes up that 30%. So we call that debt utilization percentage. How much of your credit cards limits are you utilizing? 10% is new credit. So new accounts, recent accounts that you've opened. Those negatively affect your credit. You're opening more credit accounts, it's higher risk. Why do you need this money? 15% is length of credit history. So I always recommend to my members that you don't close credit accounts. Don't close a credit card account. If you have a zero balance, maybe use it once a year, get gas, and then just pay it, wait for the statement to come, pay it off, just so it keeps active. The only reason you ever want to close one of these cards is maybe it was a credit card you got started to rebuild your credit, and they're charging you like $50, $75 annually to have it. Once you have a better option, you could close that. Depending on how long you've had it open. You might want to talk to maybe one of us at the credit union about that specifically. But in general, you want to keep your oldest accounts open and active. And then 10% is credit mix. So that's having a mortgage loan, having an auto loan, having a credit card, having a very, different types of credit. So a mix of credit. So that's all what goes into calculating your credit score. So I could have saved all that and went right here. Payment history, repayment behavior, on time, amounts owed, percentage of credit, amount used, owed on accounts, so your available credit, length of credit history, how long you've had your credit, and are they used? So that's, use them once a year, keep them active. New credit, number of recently opened credit accounts and credit inquiries, and the credit mix, the mix of credit cards, installment loans, and mortgage loans. So this is good information to know. This shows you exactly how long stuff will stay in your credit report. Remember I said time heals all wounds. So closed accounts in good standing, they're on there for 10 years. So that's good, that helps you. Later missed payments, so that's going over 30 days, that's 7 years. Collection accounts, 7 years. Civil judgment, the various bankruptcies, 10 and 7. Unpaid tax liens, paid tax liens, and credit inquiries, 2 years. Reporting time versus obligation to pay. Money is still owed after the credit reporting time limit expires. Debt will still show on your credit report. So that's about when you get your paying off the credit card before the statement is issued. So if you pay off that balance before they actually cut the statement out, it won't show up on the credit report. It's when they've already issued out the statement. Whatever your statement balance is, that's what shows up on the credit report. So really, I'll touch on this real quick. If you know you're getting ready to apply for credit and maybe you have some small balances on credit cards, it's good to pay those off. The lower your utilization percentage, the better, okay? And you want to pay them off like 2 or 3 months in advance, because sometimes, it takes, depending on when the statement's cut, takes some time for those credit reports to update. Fixing bad credit. So make sure you can pay your bills on time. Good to pay off past due accounts. Remember, 35%, this is the biggest factor that goes into credit scoring, comes from payment history. Accounts more than 90 days have a bigger impact on your score than those that are 60 or 30 days late. So if you're behind on multiple accounts, start with the longest ones and work your way up from there. And whatever you do, if you are struggling right now and you are past due on things, it's best to work with the companies, make a minimum payment if they need it to prevent it from going to the collection company. You do not want to have these accounts get charged off. That's going to really, the collection accounts is going to hurt you worse than the late payments. Okay, fixing bad credit continued. Improve your debt to credit ratio. So how much money you owe versus credit you have available. So again, that's 30% of your credit score. That's how much you owe next to the limits, or compared to the limits. Keep your debt below 30% of your limit. So example, you got a $1,000 credit card limit. You never want to owe more than $300. $300 versus $1,000, that's 30%. So always stay below 30%, and that's all your credit cards combined. That's why a lot of people, they get concerned when their credit card company automatically increases their limit. That's a good thing, okay? That's the credit card company, they want you to spend more money. You shouldn't do it, but just keep in mind that when they increase your limit, that just keeps that utilization percentage lower. So that's a good thing, okay? And remember, they're doing a soft hit on your credit, so they didn't run your credit or anything. It's not an inquiry. They just said, hey, he's doing good on this card, let's bump up his limit for him. Pay down revolving debt first, okay? You really want to pay off any derogatory credit first, depending on your credit situation, collections, charge-offs. You really want to settle or start making payments on that first, make all your minimums on everything else, and then move on to the credit cards. Transfer debt to a personal installment loan, okay? So let's say you have $5,000 in credit card debt, you're maxed out. You got 5,000 limit, you got 5,000 owing, okay? So you're 100%. Okay, and let's say your credit score is like at 630 because of this. No joke, you move this to a personal loan, give it 3 months, this could affect you as much as 40, 50 points just by doing that. Credit utilization is huge. It's 30% of your credit score, only 5% less than paying on time. So you can see what a big factor that is. Add an explanation to your credit report, so already explained that one. Add a short statement to include in your file, so basically the same thing. Okay, applying for credit. Do not apply for multiple accounts within a short period of time. Why? Represents risk. Why do you need credit and multiple credit in such a short amount of time? Plus, if you're applying and getting declined and then applying and applying, just know those inquiries are adding up and continuing to lower your score. It represents risk to your creditors. Recent inquiries represent increased risk because they indicate that you owe new debt which hasn't yet been reported, suggest you might have cash flow problems, and are seeking new credit to support your spending. Rebuilding your credit. You don't rebuild the credit score, you rebuild your credit history. Credit score comes along with all that. Secured credit card. What is it and how do you use it? So a secured credit card it's secured by money you deposit as collateral and kept in an account. Similar to a security deposit that you use when renting a home. The maximum you can charge is usually equal to the amount you deposit. Money you put up front is not used to pay off monthly charges. And pay at least your minimum balance on time. If you do not pay the balance, it will negatively affect your score. Because that's a late payment. So when people get declined for loans that I'm helping them with, the first thing I do is, I'll tell them what they need to pay off first, and then I'll tell them now you need to start establishing some good payment history. Well, pretty much if you have a source of income, you're not going to get declined for a secured credit card. At Noble, there's no annual fee. You can start them as little as $250. So you open a membership, stick $5 in it, or more if you wanted to. You need to have $250. We lock that up. You don't have access to it, and then you get your Visa card. And then with that, you just want to keep it paid off, pay on time, and that's going to establish payment history for your credit report and with the credit union. Okay. So I've worked with members where they've had a secured credit card for a year. Maybe they got declined on that auto loan that they wanted. I had them set up a secured card. They paid on that 6 to 12 months. They came back to me, and we got them approved for that auto loan because they showed some payment history. Any questions on the secured card at all? You want to watch out. Secured cards, there's a lot of them out there. Most of them charge annual fees, okay, because they know you need to rebuild credit, okay? So they know they got you, they want to charge you. Watch out for that. I would absolutely recommend a secured card over all these other cards that, they're going to give you a $200, $250, $300 limit. When you get the card, it's already got $200 worth of fees. And then there's going to be crazy annual fees, monthly maintenance fees. Stay away from that. Go with the secured card just to get a credit card and establish some payment history. Getting your loan, decision process, underwriting, ability to pay, willingness to pay. So ability and willingness. So ability to pay, assets, what money in the bank, property that you own, cars, stuff like that, income to debt ratio. That is probably one of the biggest factors in getting a loan approved, is can you afford it, okay? Divide monthly gross income into total monthly debt obligations. Bills divided by income equals your debt ratio, it's a percentage. To get a mortgage loan, just FYI, your max, including your new mortgage payment, is 43%, is the last time I checked. I used to do mortgage loans at the bank I used to work for before I came over to Noble. It used to be higher, they've lowered it, but I believe FHA loans around 43%. Don't quote me on that. I'm not in that side of the industry anymore, but so that means 43% of your gross monthly income goes to your debt. As long as that's under, you can possibly get approved for a house. Willingness to pay, financial responsibilities, payment history, history with the credit union, employment history, residence history. So these are all big factors that go into making a decision to approve a loan. So your payment history and history with the credit union, and then again, see your employment history and residence. It shows that you're a stable borrower. You're not moving all over the place, you're not switching jobs, you're stable. It represents less risk to creditors. Why have a credit card? Car loans and mortgage are important, but revolving credit tells more about you. You must manage yourself. Is your balance growing each month? Have you charged to the max? Do you make all payments on time? Are all the payments at least the minimum due? One thing that's not on here that's very important to have a credit card is, let's say if you have a car loan, okay, and you hate credit cards, you don't want them, never had them, but let's say you have a car loan and you pay this thing off and the car's going to last you for a while, and you drive the car around for like 2-3 years. Eventually, if you don't have a credit card, that paid off loan goes away and your credit score reverts back to 0. So that's why you always want one credit card. Whether you use it or not, you have it once, maybe use it once a year for gas just to keep it active. You always want one revolving account on there, okay? Questions on this slide at all? Okay. Credit cards, what should you look out for? So rate increases, late payment fee, balance transfer fee, over the limit fee, replacement card fee, cash advance fee if you always pay in full, grace period, universal default clause, 120 days same as cash, minimum payment trap. So rate increases, that's your interest rate, you know, are they just jacking your rate up for no reason? Credit cards do that, you gotta watch out for that. That's why it's always good on the, I think it's usually on the first or second page of your credit card statement, it's gonna show you what your rate is for purchases, balance transfers, cash advances, it's all on your statement. Late payment fee, that's in your disclosures when you first open the account. Balance transfer fee, typically a percentage of the money you're transferring over. Over limit fee is when you got a $1,000 limit, you go over that limit, they're gonna charge you a fee, and then again, remember that utilization percentage, that's affecting that too. Cash advance, replacement card fee, you guys probably know what that is. Cash advance fee, it's a percentage of what you're taking or a fee. Fee if you always pay in full. So with a credit card, if you're paying off your statement balance every month, you shouldn't be charged interest. Close that credit card if you please. If you are getting charged interest and you're paying off the statement balance, that is a bad card to have. Grace period. So some credit card companies are gracious enough to give you a grace period. Noble gives you 5 extra days. So for Noble members, your payment's always due on the 17th. You don't get a charge, a late fee until after the 22nd. On installment loans, car loans, personal loans, stuff like that, we actually give you 10 days. Very lenient. Questions? Minimum payment trap. So many Americans get stuck in this. So this example shows amount owed $2,000. Payment option is the minimum. Now, that's generous, that's 4%. Most credit card companies, believe it or not, they only need you to pay 1% of your balance, or like a $25 minimum, whichever is greater. This is for a reason. They only want you to pay 1% of the balance, so that's all you pay, and then you end up paying on this debt for, say, 9.5 years, and your $2,000 ends up costing you over $3,000. That's what they want. So on the flip side, you swipe $2,000, pay $100 a month, pay off period's 2 years, you can see what you can reduce the interest cost to. Now, I don't agree with any of this. If you're gonna have debt for more than 2 years, you need a loan, okay? Long-term spending should be on a loan. Fixed rate, it's paid off in a certain amount of time. You're forced to pay that amount, it's done after a certain amount of time. You don't wanna put big purchase on a credit card, and then you're paying on it for 15 years and how much interest have you paid, right? Credit cards, I don't think you should owe more than 3 months. That's me personally, okay? So if you're gonna charge it and you can't pay it off in 3 months, don't buy it or finance it a different way. Interest rate is 18%. That's what they use to calculate these. That's an average rate for credit cards. Noble, that's the highest it goes with us. Throw that up there. Oh, back here. Yeah, we have a late payment fee. We have to, encourage our customers to pay on time. But we do not have a balance transfer fee. To my knowledge, no, we do not have an over limit fee. If you're coming in once a week for a replacement card, eventually we're going to start charging you a fee, but we give you a lot of leeway on that. There's no cash advance fee with us, okay? And every credit card I know of, you need cash advance. Let's say your purchase rate's 18%, they're going to jack your rate up to 30% on a cash advance. And they're going to charge you 3 to 5% to do that. Noble, there's no fee and it's the same rate. So you got your checking account, you got your credit card, you can basically transfer money into your checking account. There's no fee and you pay the same rate. That is an extremely unique product. Sorry, I'm getting into sales mode here. I'll stop that. I'm educating here. Okay. Why improve your credit score? Higher credit score, lower rate, lower monthly payment, less cost to you. I like that. Common myths, good one. When paid, the bad debt will go away. The credit reporting company denied me credit. No, the creditor denied you credit. I'm not responsible for those charges on our account. Until you dispute it, until the credit bureau removes it, you are responsible for it. That's why it's very important to check your credit and dispute things as they come up. A divorce decree separates joint accounts. No, you need to close that account, get it paid off and close it. Or if good relationship, you can continue to, consumers must give their permission for a report to be issued. Employment is an exception. So we saw that, remember on the inquiries, that little line 2, how other, like your current creditors, you have Capital One card. Capital One can, do a soft hit on your credit from time to time and check it, and that's how they qualify for those rate increases, or the limit increases. Requesting your own report and pre-approved offers harms your credit history. We already talked about that, how it does not. And there is only one credit score, and it is on every report. And I went into that already, how you have the 3 different ones, your scoring ranges are different. Credit counseling. There's a lot of scams out there, a lot of shady companies that are doing this, okay? So, very important page in your handout. Everything a credit report company or credit repair company can do legally, you can do yourself. No one can legally remove accurate negative information from a credit report. If it's you got to get it settled, and time heals all wounds, or paid off, settled or paid. Credit repair service helps people get out of debt. So they negotiate directly with creditors to lower interest rate and late fees. Your local consumer credit counseling service can provide advice on how to build a good credit record and make payment plans, and services offered for free or at a low cost. And Noble actually has one that we refer to, I think it's later in the slide here. I'll get to that. Recognizing credit repair scams, so another good slide. Wants you to pay for credit repair services before any services are provided. Tells you not to contact the credit reporting companies directly. Tells you to dispute information in your credit report even if you know it's accurate. What they do is you might be able to dispute it. The credit report, credit bureaus will remove it temporarily, but it's only short term, and then they put it back on, and then you just pay this person a fee. That's how that scam works, by the way. Tells you to give false information on applications for a loan, and doesn't explain your legal rights. Your credit rights. Credit repair company must explain your legal rights in a written contract that details the services they will perform. How long it will take, your 3-day right to cancel without any charges, how long it will take to get results, the total cost you will pay, and any guarantees. New credit identity. Watch out for ads that say they can help you hide bad credit history or bankruptcy for a fee. The new number that they give you may be a stolen Social Security number, so a lot of shady companies out there. How to improve your credit score continued. Pay off or pay down on your credit cards. Remember, 30% utilization percentage, second biggest factor. Do not close credit cards because capacity may decrease. Example, let's say you have 2 credit cards, okay? You have 2 $500 limits. Let's say you owe $250 on one of those, okay? So you have $1,000 in limits and you owe $250. That's an example of 25% credit utilization, 30% of your credit score. What happens if you close one of those credit cards, the one you don't owe anything on? Well, your percentage just jumped from 25% to 50%. Just like that, now your credit score is being negatively impacted. Move your revolving debt, credit cards, lines of credit, into installment debt. Personal loans, auto loans, home equity loans. Remember, we already talked about that. Continue to make payments on time. Older late pays will become less significant with time. Time heals all wounds. Slow down on opening new accounts. Because every time you open a new account, that's an inquiry. Acquire a solid credit history with year of experience. So again, secured credit card. Remember, a year, we were able to get that member approved for that auto loan they wanted. Use caution in closing accounts. Closing unused accounts isn't always a good thing. I've already talked about this. When deciding whether to close an account, consider the effect on your total balance to limit ratio. Positive, open accounts stay in your history forever. Your ability to resist the temptation of overcharging if you don't close the account. Ability to resist temptation. Trying to brain's not computing on that one. Time is key. You must allow time for updates to be reported. So remember we talked about paying off those credit card balances a few months before you can apply for new credit. Don't expect overnight results. Creditors typically report updates to accounts once a month after the end of a payment cycle. Closing accounts, paying down balances, and paying bad debts should be done 2 to 3 months before applying for new credit. Get your free credit report. Good slide. You have the right to receive 1 free credit report per year from each credit reporting agency. And there's the website, phone number, and I don't know why you mail them, but here are another good information. Here's all the 3 credit bureaus: TransUnion, Equifax, and Experian. Gives you the websites, numbers. And there is Noble's preferred credit counseling service, ClearPoint Credit Counseling Solutions. Gives you a website, and that org means they're nonprofit. They're there, you know, they're not there to make a buck. They're there to help you. How are we doing on time? Free annual fact act credit report. So yeah, that's the annualcreditreport.com. That's where you can get them for free. Then here's all the some other websites. Hey, there's my information. How about that? Questions? Guess I explained it all. All right.
Thank you, Eric.
Thank you, Cindy.